Hey, welcome back to the channel. Today we are deep diving into DSCR loan closing costs. This is something every investor needs to understand completely, as these expenses can significantly change the loan process, whether you're purchasing or whether you're looking to pull cash out on a refinance with your DSCR loan product. Now, these expenses can significantly impact your investment. So let's break down the top 5 questions that I get from investors, whether beginner or advanced, about the DSCR loan process for both purchases and for refinances. Question number 1. What are DSCR loan closing costs? Okay, let's take a closer look. Now, typically closing costs for a DSCR loan will range anywhere from 2 to maybe 4% of the total loan amount in closing costs. For example, if you have a $500,000 DSCR loan, you might see closing costs anywhere from $10,000 to $20,000 to get that loan closed. And the best way to get a list of these costs specific to the loan that you're seeking from the lender that you're talking to is to ask for an estimated fee schedule or a fee sheet. Or another way is to ask for disclosures. Hey, can you send me your disclosures, your loan estimate, if that's available with your DSCR lender? That's gonna have all the fees laid out on paper to the dollar, to the cent, so you're gonna know exactly what your closing costs are gonna be. Now, to break this down a bit further, okay, what are these closing costs? When I explain closing costs to borrowers, what I do is I bucket them into 3 specific buckets of loan costs. Okay, so bucket number 1, this is gonna be closing costs that are related to the lender that you're using or the broker that you're using, okay? And typically what you'll see here is you'll see discount points or origination points. You'll see administrative fees, you might see processing fees, there might be an underwriting fee, there might be a document preparation fee, there might be legal review fees. So all these fees can be found in one specific area on your fee schedule or on your fee sheet, and that is section A, or origination charges. Okay, so to dive a bit deeper into those, discount points. What are discount points? Well, if you pay any points to a lender for your loan, those points are called discount points, okay? And they're expressed in a percentage. So you're gonna hear 1% or 2%, you might hear 1 point or 2 points, all right? And those are equal. So if you hear somebody saying 2 points, think 2% of the loan amount in costs. And those can be broken up a little more because some discount points are gonna go towards buying down your interest rate, whether that's temporary for a year or even 2 or 3 years, or for the long term of the loan. So you could prepay points on the loan to decrease your rate temporarily or to decrease your rate permanently. Additionally, if you're getting credits from the lender, that is also expressed in points. Now, this could be located in section A with your origination charges. It could also be listed elsewhere on the loan estimate or on a fee schedule. But if a lender is, say, they're charging 7.5% and that rate is a little bit higher than what the market will bear, sometimes that lender will offer lender credits, meaning points towards your closing costs to help lower your closing cost total. Part of what you'll find in points as well is going to be the amount that the broker or lender is charging you to work on your loan. That is going to be their compensation. Now, the second bucket, think of any third-party fees. So any service, any company or individual that's performing services to close this transaction or to help you close this transaction, they're going to be compensated for their work as well. So here you can think of appraisal fees. We have to pay an appraiser, third party, to come out to the property and appraise it and possibly put together a rent schedule for your DSCR loan. You'll also pay title and escrow. So escrow, the escrow officer in charge of handling your file from the very beginning to closing, they're also compensated for their work. And then other fees along with title and escrow include title insurance, and you'll also have notary fees perhaps if you're signing remotely. There's also document prep fees. There might be some endorsements required depending on the type of property that you have, which will also show up in that same second bucket of third-party fees. There could be legal fees for an attorney to review that transaction to make sure all of the title information is accurate. There could also be legal review fees for the LLC that you plan on using, investing title with when you close on your DSCR loan. You'll also have a credit reporting fee. Depending on who pays for the credit report, that fee will also be listed in that second bucket of third-party fees. And occasionally, depending on where the property is located, there might be a survey required. In many states and municipalities, we do have to have a survey fee listed in that second bucket. Hey, thanks so much for watching. Really appreciate you tuning in. If you're finding some value here, please subscribe. I am pushing new content out on a regular basis. Enjoy the rest of the video. Now we have the third bucket. So the third bucket of fees includes prepaids. It includes escrows. Okay, so let's break that down a bit further. So with prepaids, you're gonna have prepaid interest, you're gonna have prepaid taxes and prepaid insurance. Now, how much of those three fees should you expect to pay? Well, let's take interest, okay? So prepaid interest. Now, interest for mortgages is paid in arrears. So when we make our mortgage payment on the 1st of July, let's say, we're paying for June's interest, okay? So when you close on a new loan, and let's say you close on June 15th. If you close June 15th, you're gonna prepay for interest on June 15th all the way through the end of June. Now that's a half a month. So if you have, let's say, a $400,000 loan amount and you're getting charged 7 1/8% on the rate, that's gonna be roughly $2,300 to $2,400 in interest that is required for that entire month. Now, we're closing on the 15th of June, so we don't need a whole month. So we would chop that just about in half. So you can expect to pay maybe somewhere between $1,200 and $1,300 for prepaid interest, and that's gonna show up on your fee sheet. Now, conversely, let's say you close on June 1st. Well, we have to prepay the entire month's worth of interest. That's gonna be closer to $2,400. And then also you have the scenario where, let's say you close on June 30th, okay? If you close on June 30th, you have literally 1 day of interest to pay, and that might be $78 in interest that you'll prepay. So you can see here, it varies wildly depending on the day of the month that you're closing. Now, how much should you expect to prepay for insurance? Well, on a purchase, you're typically gonna have to prepay for a full year for 12 months of insurance premiums at closing. That's also gonna be listed in your fee sheet. And for taxes, depending on when you're closing in the tax cycle for the location of the property that you're buying, will determine how many months of taxes are required for the prepaid tax bucket. Oftentimes I see this number somewhere around 6 months of taxes. But again, this depends on how recently taxes were paid and the next cycle for when taxes are owed, for when property taxes are owed on that property. Now, if you're refinancing with the DSCR loan, you're likely not gonna have to pay for a whole lot of months prepaid on insurance. But this does depend on when your insurance premium renews. Taxes are very similar. You're likely not going to have to prepay a bunch of taxes when you refinance, but again, this depends on the point in time that you close on your refinance DSCR loan with regard to the property tax cycle for the property. Question number 2, can you roll closing costs into the loan? Now, on a purchase DSCR loan, no. Now, this is a great strategy to employ when you're purchasing using a DSCR, and that is see if you can negotiate with the seller to offer some seller concessions at closing. You can really ask for whatever you want. This is all negotiable. So if you could ask for maybe 2% or 3% of the purchase price and seller concessions, and you can get that figure from the seller at closing, that'll offset a majority, if not all, of your closing costs. Now with refinances, absolutely you can roll those costs into the loan, and most investors prefer that method. Now it does come with trade-offs. If you're pulling out a good amount of cash and you have enough to cover your closing costs, that's great. But just consider this, for every $10,000 that you finance at current market rates, you can expect your mortgage payment to go up by about $67 or $68 per month. Just something to keep in mind. The trade-off is the mortgage payment will be a bit higher because you're not paying for those costs at closing. Question number 3, are DSCR closing costs higher than conventional loan closing costs? Generally, yes. DSCR closing costs oftentimes this is because they're designed specifically for investors, and those sorts of investment loans do have a higher risk profile. People tend to let their investment properties go before their primary properties go if they have any financial trouble. So the lenders sort of bake that risk in. And there's also additional closing costs for things like attorney review fees, right? If you're closing in an LLC, or additional addenda required on the appraisal to gather market rent detail. Those are some of the things that cause those costs to be higher. Now, these loans also require discount points or origination points up front. As we discussed earlier, this could be 1 point, 2 point, 3 points. I've seen 4 points and 5 points, 6 points for much weirder, really wonky transactions with a lot of variables involved. But that's one reason that they charge upfront points, is because if you're getting a higher interest rate on an investment loan like a DSCR, the chances are if the rates drop, you might refinance that loan much, much quicker than a primary homeowner will. And if that's the case, the lender's not gonna make the money that they wanna make. So oftentimes you'll see that upfront discount point figure as a closing cost. Question number 4, how can I lower my DSCR closing costs? Now the good news here is you can often shop around, right? You can shop for the best interest rate as you should. You can also shop with closing costs. So if closing costs are on your radar and you want to make sure that number is as low as possible, talk to your broker, talk to your mortgage advisor or your lender and say, hey, these costs seem a little bit high, or even if they seem reasonable, say, hey, is there anything we can do to shave off some of these costs? Oftentimes, they're gonna be transparent with you and tell you exactly what each cost goes towards. And they're gonna focus on those 3 buckets to make sure that you're informed, hey, these are what's required, or hey, I might be able to do something here, let me look into this further. It never hurts to ask. Now, you can also consider less expensive title companies to use and ask your title company, hey, do you have an investor rate? If so, what does that look like? Can I save a few $100s here, perhaps? The best way I help lower closing costs for my clients is we have a pretty thorough conversation up front to determine what is the short-term goal here, but also what is the midterm and the long-term goal with this loan. Sometimes we can put clients in different loan products with different variables and features and terms to support whatever their goals are, thereby lowering the closing costs or potentially lowering the rate. It's really tough to do both, but sometimes we can do that as well. Question number 5, are DSCR loan closing costs tax deductible? Now, first thing I'll say is I am not a tax professional, so whatever I say here, consider it with a grain of salt. Definitely check with your tax advisor on this, but there are some closing costs with a DSCR loan that are tax deductible for the year that you close on that loan transaction, and also throughout the duration of the rest of the loan. Now, it's my understanding that mortgage interest that you prepay when you close on a DSCR loan is tax deductible in the year that you close on that loan. Mortgage points, so any discount points that you're gonna pay at closing could be tax deductible in the year that you close on that loan. And to remind you, these are the points that you're gonna pay to lower the interest rate of your mortgage on your DSCR loan. Now, if you're refinancing, it is also my understanding that the points that you pay to lower that interest rate can be deducted over the life of the loan. Property taxes paid at closing, including any taxes that you put up into your escrow account, could be tax deductible in the year that you closed your DSCR loan. Again, I'll say it one more time, I'm not a tax pro. Please check with your tax professionals on this. Do not take my advice. Now, understanding and managing DSCR loan closing costs, it's going to be a huge impact to your investment strategy. So understanding these are critical. Being able to shop around, knowing what to look for, knowing what costs you should expect to see even before you see the fee sheet. That all comes with experience, but that's what I'm here for. I'm here to help serve and support any way I can. I got your back. Now, if you'd like to hop on a call to discuss DSCR loan closing costs a bit further, perhaps run through some interest rate scenarios or any other questions you have specific to your DSCR loan, I'm happy to chat with you anytime. Let's talk. Now, if you found this video helpful, please like and subscribe, and also comment below if you have questions about DSCR closing costs, interest rate, discount points, origination fees, any of the other terms I mentioned here today. Please drop them below. I answer every one of them individually, and thanks again for tuning in. See you in the next video. So those are just a few of the things that cause the closing costs to be